My audio is not. Okay, can you hear me online? Don't pause it. Can you hear me online? Yes, thank you. Okay. This is not. Okay, so let me know, let Amir know if there's any audio issue, because it doesn't sound like my earpiece is working. I don't know why. Okay, so you can still hear me. Okay, so we'll just go with that. Okay, so welcome back to the started today. We are working on chapter 12 today. First off, a lot of administrative announcements for today. The final exam is over chapters 9 through 13. It will only cover the learning objectives that we cover, meaning that I've already taken out, if we didn't cover a learning objective, it's not in the study plan, it's not on the practice exam. So 9 through 13, it starts Monday, December 14th at 8 a.m. through Thursday, December 17th. You have to start it by 4 p.m. on Thursday at finals week. So you have that window of opportunity to take the exam. If you're in sections 7 and 8, schedule your exam with ProctorU as soon as possible so you get the best date selection. And the final exam is not cumulative. It's over chapters 9 through 13, and only the learning. It was funny, I just did it already. Because I adjusted it so it wouldn't get cut off when I'm starting here. Yeah. Okay, so publicly held companies, this is relating to last week. We talked about this last week. Publicly traded companies have the option, See, I think my earpiece is not working. Thank you, Bethany. I think that that's the case, that my earpiece is not for whatever reason, but I can't turn it on with that. This should be fine now. I'll just hold this. Okay, publicly traded companies have the option to produce audited financial statements, true or false. This relates to last week. And so publicly traded companies do not have the option to produce audited financial statements. Since I'm going to carry this today, you can do that. Okay. Okay, so this question will be open for a few more minutes. I won't announce when it's going to close, but we'll close it in a few minutes, so make sure you get it answered there. So publicly traded companies have the requirement. They are required to produce audited financial statements. Publicly traded companies have to produce audited financial statements. Okay. So what's due this week? Chapter 12 homework is due this week. Just a reminder, Extra Credit Project is out there. The Extra Credit Project can add 2% to your final course grade. For example, you finish the course in My Accounting Lab, you see an 88. If you've completed the Extra Credit Project, I will add 2 points to your final grade, making it a 90. It's in My Accounting Lab under homework. The details are in Blackboard on the left-hand side menu. It's due by Saturday, December 12th. You have to complete all 10 steps with a score of at least 80% on each step. Cursor somewhere. Somebody's cursor's on there. Oh, there. Okay, thank you. Okay, so you have to complete all 10 steps with a score of at least 80% on each step. I found a couple people who skipped one step and their overall score was 90%. That won't get you the credit. You have to complete all 10 steps. To get credit, there's no partial credit. So it's not like you can get 80% just 2 points. It's either all or nothing. You have to do the whole accounting cycle or not. Don't wait until December 12th to do it. If you're interested in doing that, do it before then. This Extra Credit Project right now, if you click on it and start it, it impacts your calculation of your grade in My Accounting Lab. I can't help that. It's an administrative thing. If I take it out of your grade, you can't touch it. You can't work on it. So it's just going to be there. As soon as this is due, it's due Saturday, December 12th, so probably Sunday, December 13th. I'll be removing it from your score, so it will no longer impact your score. So if you've opened it up and tried it and decided you didn't want to do it, it is coming out of your score. It will come, that score will come out of your My Accounting Lab score. The extra credit, the 2 points, will never show in My Accounting Lab. So when you're done with the course and at the end of the course, in My Accounting Lab, you'll see your grade. If you've completed the extra credit, you just know that I'll be adding 2 points when I do the final grades in Flashline. So you will not see it show up there. Later this week, Wednesday, we're going to be talking about what the process is for finals week and what to expect about your grades and all that. Taking a long time to load. Wow. Okay. Okay, and I wanted to put a plug in. Starting this week, for the next couple weeks, they're going to be accepting applications for the Accounting Study Abroad trip. This is a picture from 2 years ago when I took 20 students to Paris, London, and Edinburgh, Scotland for 2 weeks in May. They have now opened it up for applications for this coming year. It's a 2-week trip. If you're an accounting major, you are eligible if you've completed this class and you're completing managerial accounting next semester. It's May 15th through 27th, so it's squeezed in there in intersession. It's, you're eligible and you have to have a 2.5 grade point. The trip cost is $4,500 approximately, and plus 3 credit hours of tuition. It counts as an upper level accounting elective, and there are scholarships available. Generally, I think in the past the scholarships have been about $2,500 or $3,000, somewhere in that range. They could be even more now. If you're interested, let me put this up there, you would contact Dr. Hoffman. He's doing the trip for a couple years, so we rotate it. I would say that I've done the trip, I did the trip 3 years in a row, and it was the single best experience of the students that went after we were done. They were like, this is the most awesome experience. When we go to Paris, London, and Edinburgh, we visit accounting firms, we visit accounting standards boards, and then we do the cultural things. It is such a great experience, especially to go to Paris, where, yes, you can get by fine with English, but it's not the primary language, and it's a really good experience to have to get through around in a city where they don't speak your native. Your language is not the language there. I cannot say enough good things about this trip. It is a wonderful experience. It is worth the sacrifice of time and money, and if you could go, you will need to contact Dr. Hoffman fairly soon because the trip does fill up. Every year this trip fills up within a couple weeks of starting applications. So do consider that. If you're an accounting major, you can email me for more information, or you can email Dr. Hoffman, and they will be taking, I think they're taking 30 students this year. So I would encourage you to do that. If you're not an accounting major, just as an aside, I would do any study abroad course. If you can't do a whole semester, I get that. I can't do a whole semester either. But if you pick one of the 2-week courses, that is so much, it'll give you so much for that 2 weeks. You get so much out of it. I would definitely encourage doing some study abroad course. Okay, so now on to the content for today, I guess. So this chapter, what we've done so far in the course is we started out, we talked at the very beginning of the course about the financial statements, and then we went into the balance sheet. So we went over all the assets, and we did liabilities, stockholders' equity. Last week we talked about the income statement and quality of earnings. This week we're talking about the statement of cash flows. So it's the statement that we really haven't done anything with yet. The statement of cash flows is designed to let investors know where we're getting our cash, what we're doing with it. So the statement of cash flows reports cash flows, the cash receipts, where did we get our cash, and the cash payments. What did we do with it? The statement of cash flows will always be for a period. So it'll be for 1 month, for a quarter, for a year. And I'm going to answer that because that's a good question. So there's a question. I'm jumping back to the chat room. Can we use Amir to help us out with the extra credit? When are his hours again? Amir does not have hours. Graduate assistants only have a limited number of hours, and Amir's hours are spent in the classroom here. If you need help with the extra credit, I would suggest you could go to tutoring and ask. When you're working on the extra credit, if you get stuck on a part, send me a screenshot of it, and we can get help, but identify what step you're on and a screenshot of what you're talking about, and we can help you, okay? So there we go. Okay, so back to statement of cash flows. So the statement of cash flows says, where did we get our cash, the cash receipts, and what did we do with our cash? More small businesses fail due to lack of cash than lack of income. Cash is extremely important as a company, and investors find this statement to be quite useful. It's the newest financial statement of all of them. Of the 4 that we've looked at, the statement of cash flows is the newest. It came into being in the mid to late 80s, so it has only been in existence like 30 years or so, but it is the newest of the bunch. It includes cash equivalents. So when we have certificates of deposits at banks or money markets or short-term treasury notes, those are all considered cash as well. So it's not just currency. Okay, so statement of cash flows, when we talk about what it's for, it'll predict future cash flows. We can look at the statement of cash flows and predict what cash we're going to get in the future. It'll help us evaluate how well management made decisions. Do we have cash coming in? It'll help determine a company's ability to pay its dividends and interest, and then it helps show the relationship of net income to cash flows. They can be quite different. You can have tons of net income, but if you're not collecting cash, you're not going to survive in the long run. Okay, we're pushing out a question now. Okay, I'm going to leave the slide up for a minute for you to continue taking notes, but we're pushing out a question now about the statement of cash flows is designed to fulfill all those following purposes except 2. So the question is on your devices now. Okay, so that statement of cash flows is designed to fulfill all the following purposes except 2. We're going to have about 10 more seconds, and I'm going to close this. Okay. Okay, so the statement of cash flows is designed to do all of these things except it has nothing to do with the collectability of accounts receivable. We can't tell by looking at the statement how past due our accounts receivable are, but we can do the other things that are listed. Okay, next up, we're going to move along pretty quickly. By the way, in this chapter, there's only 4 learning objectives, and we're only doing the first 3. So this chapter is more manageable in a couple days. Okay, now, on the statement of cash flows, there are 3 types of cash flows. So the statement of cash flows, what we're doing is we're looking at where our cash came from and where it's going to. We break those cash flows down to 3 types of activities, and you have to know the 3 types of activities. Okay, the first one is operating. Okay, operating activities, this is what we're in business for. It creates revenues, expenses, gains, and losses. Okay, this is where what we do to get our net income. So operating activities are things to do with selling our goods and services essentially. What cash flows are associated with us being in business to do what we're in business for? The next type of operating cash flows are investing cash flows. And investing cash flows have to do with long-term assets. So investing cash flows have to do with property, plant, and equipment. When we buy a building, we buy a piece of equipment, we sell a piece of land, those are all investing cash flows. Okay, so investing cash flows have to do with long-term assets. And then our final category is financing cash flows. These relate to long-term liabilities and stockholders' equity. It says owner's equity here. Owner's equity and stockholders' equity are the same thing. Okay, we have these three types of cash flows, and I'm going to go over them again. But of the three types of cash flows, the one that is the most important for evaluating a company is operating cash flows. Okay, operating cash flows are those cash flows originating from why we're in business. The reason these are the most important cash flows for us to evaluate are because we want to know, is the company generating enough cash from its operations to stay in business? The other two, investing, relates to, we could get cash from investing activities if we sell off property, plant, and equipment, if we sell off long-term assets. We can get cash from financing, which is going to the bank and borrowing money, or going to the equity market borrowing money, or issuing stock. But both of those are limited. We can only sell off so many assets before we go out of business. We can only get so much financing, and then they won't loan us anymore. So we need to make sure that we're getting cash from our operating activities. Our operating activities are generating cash for us. And so of all these activities, the three types of activities, operating activities are the most important. And I would know that. I would star it. I would make sure I had operating activities starred, because those are the most important cash flows when we're evaluating a business. Our operating cash flows are most important. Okay, now Exhibit 12.2 in your book kind of breaks down the statement of cash flows by looking at the balance sheet. Our operating cash flows have to do with current assets and current liabilities. And how we're going to measure operating activities by looking at changes in current assets and changes in current liabilities. Investing cash flows have to do with long-term assets, okay? And then financing cash flows deal with long-term liabilities and stockholders' equity. Stockholders' equity and owner's equity are the same thing. The terms are used interchangeably a couple times in the chapter. Okay, so coming up here in a few minutes, not immediately, but we're going to be looking at things, and we're going to be identifying what type of cash flow they are. So for example, if we purchased land with cash, we would say, well, what, and we know it's all cash, so we're purchasing land. What is land? Land is a long-term asset, and then we would say purchasing land would be an investing cash flow. So that's an example of what we're going to do with this. Whenever you're looking at a list of transactions, you have to identify what type of activity it is, and it relates to where on the balance sheet that item would be. Okay, there are two formats for operating activities. So when we do a statement of cash flows, which we'll do here today or Wednesday, there's two ways we can calculate the operating cash flows. The first one is indirect. The first one, we take our net income, which is on an accrual basis, and then we make a whole bunch of adjustments to it to come up with cash provided by operating activities. It's called indirect because we start with net operating income, net income, and then we have to make adjustments to it to come up with cash provided by operating activities. Okay, so we have indirect. Next up, we have direct. Direct cash flow just says, here's all the cash that we've gotten, and here's all the cash we've spent. The only one that we're going to do in here is the indirect. The indirect, basically down here, we start with net income, and then we have a series of adjustments, and we come up with net cash provided by operating activities. So it's backing into it. It's saying, here's our net income, here's all of our adjustments, and here's what the cash was. And that's a backward way of doing it because we're not actually measuring cash. We're starting with net income. Net income is not the same as cash because there's accrual accounting. And we make adjustments for things that, expenses that we've incurred and haven't paid yet, etc. So we start with net income, make it adjustments, and come up with net cash provided by operating activities. The other method, direct, we say, here's the cash we got from operating activities, and here's the cash we spent on operating activities, and here's our net cash. So the direct method makes more sense as a user. As a user, we look at it and go, oh, look, we start with collections from customers, and then we deduct payments to suppliers, etc. The reason that most companies in the U.S. use the indirect method is because the information systems that have been set up for decades are not equipped to come up with the information for the direct method. This is a limitation of our system. So most companies use the indirect method. They are not equipped to accumulate what's needed for the direct method. So in the U.S., typically, most companies use the indirect method. That's why we're studying it. Under IFRS, you can only use the direct method. So I think over time, companies are going to migrate to the direct method, but we cannot. It would be astronomically expensive for companies to change their systems to go for the direct method. So in here, we are only doing the indirect method, and this only relates to the operating cash flows. Okay, so now we have a question, okay, true, false. Of the three types of activities reported on the statement of cash flows, so we had operating, investing, and financing. Investing activities are the most important when evaluating a business, true or false? Okay, now the key word in this question to evaluate whether this is true or false is the word investing. Is that the type of activity that's most important when evaluating a business? We're going to close the question in about 10 seconds. Okay, and that is false. It's operating activities that are the most important. So operating activities are your most important activities when evaluating the business. Okay, so now we get to the third learning objective, which is the preparing a statement of cash flows using the indirect method. Now today we're going to look at how to prepare one. We're going to do some questions on where different activities would fall all on the statement, and then Wednesday we're actually going to do a statement. So today is the format, Wednesday is filling in the numbers. Okay, so on page 670 in your textbook, this is also in the PowerPoint you can download. This is an excellent statement of cash flows, just to give you a bird's eye view, because you won't be able to see everything, but this is looking at it from the top. When you look at it from the top, you start with the operating cash flows. You have the cash flows from investing activities, you have the cash flows from financing activities, and then you come up with your ending cash. So basically you're saying, here's my operating cash flows, here's my investing cash flows, and here's my financing cash flows. Okay, so that cash flows from operating activities, now I've made it a little bit bigger. What we're doing there is we're starting with net income. Okay, the first item, when we're dealing with cash flows from operating activities, remember we're only doing the indirect method, we're going to start with net income. And again, if you don't have these PowerPoint slides, I would urge you to download them and at least get these couple, because these are really nice templates of what to do. So we're going to start with net income. We're going to have a series of adjustments. Now this adjustment line, this subtitle is really long, but it's always called Adjustments to Reconcile Net Income to Net Cash Provided by Operating Activities. Really long subtitle, but there it is. And then you'll have a series of adjustments under that. Okay? And those adjustments are depreciation, and again, we'll see this again coming up. We have depreciation, we add that to net income. Why do we add it to net income? Because net income is on an accrual basis, and to calculate net income, we would have subtracted depreciation. Depreciation is 100% non-cash, because it's just saying, here was the cost of my asset that I bought many years ago, here's my depreciation this year. So we're going to adjust net income. We're going to add depreciation to it. We're trying to get net income to a cash basis. So we're going to add depreciation. We are going to add back loss on sale of long-term assets. Again, we're doing this to adjust an accrual basis net income to cash. We're going to subtract the gain. We're going to, then we have a whole bunch of, we have a whole bunch of things that we add and subtract, and we'll get to those in a minute again. Again, probably not going to write all this down right now. I would go back and download that slide for a template, and we're going to do problems on Wednesday that do this as well. Okay, and at the end, so we start with net income, and then we have all these adjustments, so we add and subtract our adjustments, and we come up with our net cash provided by or used for operating activities. So if the number is positive, that means our operating activities provided cash. If the number is negative, we put brackets around it, and it means that our operating activities used cash, which is generally not a good thing. Cash flows from investing activities, you're going to see sales of long-term assets, purchases of long-term assets. So long-term assets are things like investments, land, building, equipment. We'll see this on Wednesday, and then we have financing, and we look at what's going on with financing. Financing activities are issuing stock, selling treasury stock, purchase of treasury stock, and I've got slides on this coming up, so we'll come back to that. And then at the end, we have our ending cash. To get that ending cash, we're going to take the net cash from operating activities, add the net cash from investing and financing, and we end up with our net increase or decrease. Okay, so again, PowerPoint slides have a lot of good useful information on them. This is just another template, maybe a little more visible, of how you're going to calculate your operating activities. You're going to start with your net income. You're going to have adjustments to reconcile. You're going to add back depreciation, depletion, or amortization, so that's always an add back. You're going to add your loss on sale of long-term assets, subtract gain. So what you're trying to do is you're trying to take non-cash items and adjust net income back to a cash basis. And that's what all of these are doing here. And then down the bottom, 4 things. We're going to subtract increases in current assets other than cash. We're going to add decreases, etc. Again, we'll do these on Wednesday, so we'll get an example of it. Okay, so the next 3 slides I would suggest you write them down if you don't have the slides, because this is going to be important for both today and Wednesday and the exam. So this is, again, talking about what we were just talking about, except now I've broken it down even further. So we're talking about the indirect method, operating activities. What things are operating activities on the statement of cash flows? Positive items, items that add to cash or make cash go up in the operating activities. So the key here is these are operating activities. Okay, so positive items, things that make operating activities go up would be net income, depreciation, amortization, loss and sale of long-term assets, decreases in current assets other than cash, and increases in current liabilities. So you see any of those, and those are going to increase operating cash. So these are all items that increase operating activities. Next up, we have things in the operating category that decrease cash. So net loss would decrease operating cash. The gain on sale of long-term assets. A gain is a good thing, but it's a non-cash item. It would have been in net income, so now we're backing it out. Increase in current assets other than cash, and decrease in current liabilities. Those are all things that will make operating cash go down on the statement. Okay, so these are operating activities, and when we see these things, they are going to increase or decrease cash. And we start with net income, and then these are all the adjustments to net income, because net income is on an accrual basis, so we're trying to convert our net income back to a cash basis net income. If we were on the cash basis, what would our income be? And that's what all these adjustments do. The indirect method is harder to, a little less intuitive to understand operating cash flows, but companies are not equipped to do the direct method, and that's why in the U.S., for the most part, we are doing the indirect method. Okay, now, because these are really, I think they're hard to memorize. If you're an accounting major, you're absolutely going to know these in a year. You're going to have to know them for your upcoming classes. If you're not an accounting major, these are not very intuitive, and I understand that. So these adjustments here that are listed here, you'll need them on the homework. You may need them for some questions here on class. But on the exam info sheet that you can use on your exam, these adjustments are given to you. So it tells you to add or subtract. So the operating cash flow adjustments are given on the exam reference sheet. So you don't have to memorize these. So when you're doing a statement of cash flows, you have these items. You can look to see where it goes and if it's an addition or subtraction. Okay. So, okay, that's operating activities. Next up, and these, the investing and financing, you do need to know, but they're more intuitive. Investing activities, things that cause cash to go up are, okay, so we're talking about making cash go up. If we sell a plant asset is a piece of equipment a building, a piece of land. So if we sell that, we're going to get cash for it. Sale of investment, so sale of long-term investments. So we have stock in another company. If we sell it, that gets cash going up. Collection of notes receivable, long-term notes receivable, loans receivable. So if we made a 5-year loan and we're collecting on it, that's going to be an investing activity. So again, investing activities have to do with long-term activities, long-term assets. Okay, investing activities have to do with long-term assets. So the things that cause cash to go down over the long term would be buying plant assets. We buy a building, we buy a piece of equipment, we buy a car. Purchase of investments, so we've purchased stock in another company. If we make long-term loans, so these making loans to others, when we're talking about these loans receivable, we're talking about long-term assets, long-term loans, long-term notes receivable. Okay? Investing activities, I'm not going to give you these on the exam reference sheet, but these make sense. Investing activities, if you think about long-term assets, what's happening to cash? We're going to practice some of these coming up. But this is a good one. This is one of the 3 you should write down. This is the second one to write down that you'll need today and Wednesday. Okay, so we have operating activities, we have investing activities on the statement of cash flows, and the third category are the financing activities. So the financing activities, we have things that cause cash to go up. This is when we're issuing stock, we're selling treasury stock, and we're borrowing money. Items have to do with long-term liabilities and stockholders' equity. Okay? So the positive items, things that cause cash to go up. If we issue stock, people give us cash. We sell treasury stock, people give us cash. We borrow money, we get cash. So those are all things that cause cash to increase. And then we have payment of dividends, that uses cash. We have purchase of treasury stock, uses cash, and payments of principal amounts of debt. So when we pay off long-term debt, it's in this category. Again, we're talking about long-term. So when we talk about borrowing money, we're talking about long-term borrowing. And when we're talking about paying off long-term debt, it's going to be long-term. Okay? Okay, so we have these 3 categories. We have these 3 categories of types of activities. We have operating, investing, financing. You need to be able to, coming up here, and Wednesday, and the homework, and the exam, you need to be able to identify which type of activity something is, and then tell whether it would increase or decrease that activity flow. Now, the operating activities, since we're doing the indirect method, I'm giving you the template on the exam. So for the exam reference sheet, you'll have that. But the investing and financing, you do need to know. But they get kind of intuitive. So we're going to do a bunch coming up here. We're going to do a bunch of questions. So we're just going to dig right in and do one. Okay, so this first one, issuance of stock. So a company issues stock, and it's reported on the statement of cash flows as what type of activity? Operating, investing, or financing? So what we just went through, what type of activity is this? Operating, investing, or financing? Okay, so again, those slides, those 3 slides we just went through, look for issuance of stock on it. And what type of activity is that? Okay. Okay, I'm going to be closing this question in about 10 seconds, so get your answer in. Issuing stock is what type of cash flow? Operating, investing, or financing? Okay. Okay, issuing stock is a financing activity. Okay, so it was right off the 3 sheets that we went over, or the 3 PowerPoints. Okay, so the next one, we're going to do a bunch of these. Long-term borrowing. Now, long-term borrowing, we're talking about borrowing money. So when you look over the sheet, this is long-term borrowing. If you think about the 3 types of activities, operating is what we're in business for. Investing has to do with long-term assets. Financing has anything to do with long-term liabilities and equity. So think about what long-term borrowing is. Okay, you have about 10 seconds left to answer, and make sure that you make sure your answer's in there. Okay. The long-term borrowing, that is a long-term liability. Long-term liabilities and equity transactions are part of financing activities. Okay, another one, payment of dividends. Now, payment of dividends, what I like to think of when I think about dividends, it was on the sheet, the payment of dividends was listed on one of the sheets. But when you think about dividends, dividends are part of our financing activities. So on these activities, you need to determine where they go. Okay, want to be sure and get your answer in. So payment of dividends, we said it would relate to, we're going to close the question in about 10 seconds. So payment of dividends is going to relate to equity. Dividends are part of equity. Dividends are considered part of equity on the statement of cash flows. So you want to get your answer in. Okay, and that was financing. And then another one. Okay, so this one, purchase of land with cash. So the item that you're looking at is land. So if we purchase land, what kind of activity would that be? Okay, just to refresh, operating activities have to do with things that we do, like sales of things. It has to do with current changes in current assets and changes in current liabilities. Investing activities have to do with any long-term assets. Financing activities have to do with long-term liabilities and stockholders' equity. We're going to close this question in about 10 seconds. Okay. Okay, and those are investing activities. Do you get an idea for those kinds of questions? So what we're going to do with the rest of today, first of all, what we're going to do Wednesday is we're going to start out with a couple questions just like we did here, saying which type of cash flows are these, and then we're going to do some of the homework problems where we actually do a couple statements of cash flows, and I think Wednesday is the day we're going to look at a real statement of cash flows and see what we can see about that statement of cash flows. So that's what we're doing Wednesday. So what we're going to do with the rest of today is if you're in class here in person, I have brought evaluations to do. That's why we're ending up a little bit early, so there's plenty of time to do that. If you're in section 7 and 8, if you're here and you're in 7 and 8, you should probably leave. But if you're in section 7 and 8, you do your evaluations online through Flashline. But if you're sitting in the class here, I would appreciate your patience. We're going to get evaluations out. Amir and I are going to leave. So we're going to stop recording now.